Okay, when I say Washington, D.C., what comes to mind? Probably politics, monuments, all that power broker stuff, right? But underneath all of that, there's this fascinating story playing out in its commercial real estate market. A market that, let me tell you, does not play by the same rules as anywhere else in the country. So let's dive into this and really unpack what makes the DC market so incredibly resilient. The secret to DC's strength is kind of hiding in plain sight. It's its job as the nation's capital. That provides this incredible anchor of stability. See, while other cities are riding these wild economic roller coasters, the massive, constant presence of the federal government and all the businesses that support it creates this remarkably steady foundation. And this quote from our source material really just nails it. A rare combination of income stability and long-term demand. That's the core idea we're going to explore today. It's this unique mix that shapes the entire commercial landscape. To really get it, though, we first need to understand the why behind all this stability. And to do that, we've got to look at the absolute powerhouse of an economic engine that drives the whole DC, Maryland, and Virginia metro area, or as the locals call it, the DMV. And trust me, the numbers here are pretty staggering. First off, it all starts with people. You've got over 6.4 million residents in the metro area, and it's always growing. It's like a magnet for talent from all over the country, pulling people in with these one-of-a-kind career opportunities. And we're not talking about just any jobs. The median household income is over $121,000. Now, to put that in perspective, that's nearly 1.5 times the national average. That kind of income directly fuels really strong consumer spending and, of course, a huge demand for housing. And all of that activity adds up to a massive regional GDP of almost $715 billion. But here's the really wild part. Look at the growth. It's ballooned by almost 25% in just the last 5 years. That shows some serious economic momentum. So how does this all come together? Well, as you can see here, you've got that super steady anchor of the federal government. But it's not the only game in town anymore. It's being balanced out by this booming private sector, especially in tech and life sciences. Throw in a deep talent pool from all the top universities and a crazy educated workforce. We're talking nearly 55% of people with a bachelor's degree or higher, and you've got yourself an incredibly powerful and diverse economy. All right, so now that we get the economic foundation, let's see how that actually shapes the buildings, the physical landscape. We're going to break down the 4 key commercial real estate sectors, and you're going to see that each one tells a very, very different story. First up, let's talk industrial. So think warehouses, distribution centers, that sort of thing. In DC, this sector is really a story of quiet, steady strength. It's fueled by logistics, food companies, and, of course, all the businesses that just need to be physically close to the federal government. And the numbers totally back this up. I mean, even with a huge inventory of almost 144 million square feet, the vacancy rate is a super healthy 6.6%. And check out that net absorption. That means 2 million more square feet were actually leased up than were vacated. It's a crystal clear sign of strong, consistent demand that's just soaking up any new supply that comes online. Okay, now let's pivot to the office market, because this is where the story gets, well, a lot more dramatic. This is the sector that's facing the biggest headwinds right now, mostly because of that huge nationwide shift to hybrid work. And here's the headline number, a 22.1% average vacancy rate. That is a huge figure, and it tells you this is a market under some real pressure as companies completely rethink how much office space they need. But that's not the whole story. See, what's really happening is something that experts call bifurcation. It's basically a tale of 2 different office markets. On one hand, you have brand new or totally upgraded buildings in the best locations. They're doing just fine. That's the flight to quality trend. Companies will pay top dollar for those spaces because it helps them get the best talent. But on the other hand, you've got the older, less exciting buildings. They're the ones that are really struggling. And that's creating these massive opportunities to convert them into things like apartments or hotels. Next up is retail, where the story is all about location, location, location. Thanks to all that population growth we talked about, the suburban retail centers out in Maryland and Northern Virginia are absolutely thriving. Downtown, though, it's a little bit softer because fewer people in the office every day means fewer weekday shoppers. But just look at that overall vacancy rate, only 4.5%.
That is incredibly low. It really shows how resilient the retail sector is, especially in these destination neighborhoods like Georgetown and Bethesda Row. They have this built-in community appeal that goes way beyond just office workers. They're places people want to be, day or night. And that brings us to our final sector, multifamily. We're talking apartment buildings. And in the DC region, this is without a doubt the absolute pillar of stability. It's the most sought after investment, period.
And the reason is simple. You've got a strong job market, but the cost to actually buy a home is incredibly high. So what does that do? It creates this relentless, unwavering demand for rental housing. There are just more people who need a place to live than there are places available.
And this number, this says it all. A vacancy rate of just 4.4%. Just think about that for a second. While nearly a quarter of all the office space in the region is sitting empty, almost every single apartment is full.
This chart just puts everything into perfect perspective. It's the visual summary of this tale of four sectors we've just walked through. You can literally see the massive divide, the enormous pressure on the office market on one end, and then the incredible stability of industrial and especially multifamily on the other.
So what does this all mean for the future? Well, for anyone looking at DC's real estate market, the road ahead is packed with both some really clear opportunities and some pretty fascinating challenges.
So what are the big takeaways here? First, the smart money is flowing towards turning those struggling older offices into something new, like apartments. Second, that flight to quality trend means the best modern offices will continue to get top dollar. And finally, through it all, industrial and multifamily are the bedrock of the market, powered by those unshakable economic fundamentals we covered at the start. And that leaves us with one final, really fascinating question. As the whole nature of how we work continues to change, Washington, D.C. is right at the forefront of this massive urban experiment. Will the transformation of its older office buildings into new, vibrant living spaces actually create the blueprint for the American city of the future? That is a story that is still being written.